What's good, Kanekis? Welcome back to the channel. I hope you're doing well. I am joined today by a channel favorite, Rick Rule. He has done two interviews with us prior. You'll know him from those ones. But if you don't, he is a renowned economist and investor in the precious metal space and commodities as well. I also consider him as a mentor. So thank you very much, Rick, for joining me today.
Well, Kojo, thank you for the opportunity, and thank you in particular for journeying down to London to visit me during conference season. It was a delight to see you face to face as opposed to on the computer.
Yeah, yeah, it was a real pleasure. I had a lot of fun chatting for an hour, and some of those topics we'll be talking about today as well. But Rick, it's the new year. I mean, I haven't wished you Happy New Year yet, but Happy New Year to you. You have a saying where in invest that goes in investing, you're either a contrarian or a victim. And for the year ahead, 2026, I'm wondering what's your contrarian play for this year?
Oil and gas. Uh, Oil and gas is cheap. You may not get rewarded in 2026,
Mhm.
but by the end of 2028, you'll be really, really, really happy that you did it. Most theses that are cheap are not apparent. And when people look at oil, they see all the problems around the oil trade. They look at the fact that the oil price is stubbornly below $60,
Yeah.
and they don't look at the longer term. The contrarian uh, looks at consensus common knowledge that's wrong and bets against it. And that's what the oil trade is all about. By the way, you wish me a happy new year. If I get half as much out of 2026 as I did out of 2025, I won't be happy. I'll be ecstatic.
Okay, okay.
2025 to resource speculators, at least those who positioned early when it was hated, was probably, other than 1977, the best year literally in human history. It was
Yeah.
astonishing. And so if we do half as well, I'll be ecstatic.
You do know half as well will still be an outlier, right? Because a lot of these stocks did, I mean, 100% plus.
Yeah.
So, but I mean, of course, within the oil sector, there have been some real laggards. You've talked about Exxon being, very undervalued for its position as a leader in the oil space. Are there any other names in there that you'd like to throw out?
Uh, uh, Before 3 days ago, yes, the incursion into Venezuela, uh, that at least the U.S. oil companies have all been in a news trade. They've all gapped up 10 or 12%. I think likely if you wait 6 weeks, the furor engendered by that news subsides and
Yeah,
you come back into those names. Those names include Chevron, which is the U.S. major that's still most involved in Venezuela. So likely the first to move if there's actual regime change. Exxon, of course, which is the bellwether. I would suggest that more aggressive speculators consider Occidental Petroleum. I say aggressive because it has a challenged balance sheet still.
hmm
It has
hmm
the biggest inventory of undeveloped tier one locations relative to market cap of any of the oil companies, which would give it real leveraged upside to a recovery in the oils. I also like the oil field service sector, but I know less about it, so I'm very conservative in my picks there. My favorite being Schlumberger, the technology leader. Now Schlumberger was up 10% yesterday. Uh,
Okay.
so don't be buying that stock today. It's all a news trade around Venezuela. And we can talk about Venezuela later.
Yeah.
I'm
Yeah.
talking about 2 or 3 year trends. Uh, Investors have been underinvesting, not investors, pardon me. The oil industry has been underinvesting in sustaining capital. We talked about this in London to the tune of between $1 billion and $2 billion a day. A
Yeah. Yeah.
day. That suggests $1 trillion a year. And that will come home to bite. Maybe not in 2026, maybe not even in 2027. But by 2028, what you're going to see, even without a recovery in demand, is a decline in supply. And prices, of course, are set on the intersection of supply and demand. And that's going to be really dramatic. What you're looking for is companies that have resisted the temptation to defer sustaining capital investments. A lot of oil and gas companies have, rather than making the sustaining capital investments, increased their dividends and increased share buybacks. That's fine in the sense that if they do share buybacks, increases your relative ownership of the remaining reserves, but it impacts your ability to maintain supplies. There's 7 or 8 companies in Canada and Chevron and Exxon in the US that have resisted the temptation to defer sustaining capital and new project investments while still maintaining reasonable dividends. And that's where the real value is.
Yeah, for me personally, I mean, I'm in two oil and gas companies, Petrobras in Brazil and Paramount Resources in Canada.
Right.
I mean Paramount because the PE is just ridiculously low. It's two. I think it's 2.3 or so. I mean it's probably because of the Trudeau administration that's that low.
Paramount traditionally has been a gas producer, and of course, the consequence of that, gas and condensate producer, the consequence of that is that the limited access and digress, their limited access to market, has penalized them. And a lot of people look at the new Prime Minister of Canada. While he is an improvement over the old guy, I mean, at least he's numerate, right? He can add and subtract. He is still anti-energy. So you need to understand that. And I've known Paramount for a long time. I don't own them personally because I own companies that have been more aggressive with regards to reinvestment. Petrobras, I don't own either, but the amount of free cash that they generate is insane. They distribute that to their shareholders, including the government. The current president of Brazil, Lula, has an insatiable appetite for other people's money. And what that means is that Petrobras has underinvested in both their Campos and Santos operations and in the subsalt and the outer continental margin. So the Brazilian political class needs to free the very high quality technical staff at Petrobras to begin to develop the incredible acreage inventory that they have.
And they keep investing as well. That's why I really like it. Like every time I look at the news, it's like, oh, they've invested more in this site and that site. But,
they need to step up the pace of that. The opportunities that they have in the outer continental margin and the subsalt are mind-boggling. They're so mind-boggling that it would appear that Petrobras is beginning to exit their onshore assets in the Campos and Santos Basin, which I believe are the equivalent of the U.S. onshore Gulf Coast. I think they're spectacular asset classes. I can understand from Petrobras's viewpoint, if you can discover and develop 1 or 2 billion barrel offshore assets, that the relative attractiveness of a 20 or 30 million barrel new pool discovery is marginal. For a mortal like me, the idea that you could develop a 30 million barrel deposit that gave you $30 a barrel margin, which is to say that you could generate $1 billion in free cash flow over 12 years with an upfront capital expenditure of $50 or $60 million, seems pretty attractive.
But so why isn't it good enough for them?
I have limited vision.
Yeah. So why isn't it good enough for them then? Is it something that they know that we don't? Or?
We'll see. I mean, while you wait, you get a 15% dividend. And it would appear that dividend is sacrosanct from the point of view of the short-sighted president of Brazil, Mr. Lula.
Yeah. So, seeing as we're in South America, let's talk about the topic that's on everyone's mind, Venezuela. So, I believe was it Saturday morning or so that Trump decided to, they will call it capture, but really it's a kidnapping. They decided to kidnap the president of a sovereign nation in Venezuela. People are saying, oh, it's because, he wrongfully won the election. That's what they claim, but really we know it's all about the minerals, oil, and they also say gold and silver. So, in your opinion, I mean, we shouldn't really talk about profiting from it, but what should investors take into account with what's going on in South America? Because I don't think Venezuela is going to be the last one that Trump tries.
Well, the first thing to consider is that what's happened in Venezuela is not a closed book. The popular media is characterizing what happened as regime change, but the regime hasn't changed. We just kidnapped the top thug and his wife. Make no mistake, the guy's a thug. He's a despicable human being. But that's the Venezuelans' business, not ours, at any rate. So we kidnapped this thug. And the mainstream media describes this as regime change. But the whole power structure that's been in place for 25 years is in place now. All of the sub thugs, in mafia terms, the capo di capos, they're all in place. They control the army, they control the finance ministry. The cadres are emplaced in the state governments and the local governments. They're all armed, maybe not well armed, but they're all armed. So this idea that we've accomplished regime change, which is being treated by the popular media as a fait accompli, is totally silly. I'm not saying that we won't accomplish regime change, but the idea that it has occurred is total insanity. So people need to pay attention to that. They need to pay attention to that at the same time that they ponder and comment on the morality of imposing U.S. political will in other places. I agree with Mr. Trump's characterization of Mr. Maduro. I agree, too, with Bernie Sanders' characterization of President Trump.
They're all rotten, basically.
Yeah, I have sympathy for either of them. To be honest with you, I've always been more afraid of Mr. Trump than Mr. Maduro, because I've always believed that the government that was riskiest to me was the one that was closest. I don't think Mr. Maduro knew I existed. He never proposed to charge me a tax. He never proposed to subject me to undue regulation. He did nationalize some assets that I was, well, he didn't. Chavez nationalized some assets that I was involved in. Okay, that's happened in California too. So I can't suggest that he was unusually detrimental to me. But if you compare that with the damage to my livelihood that has been fashioned by federal politicians in the United States or state politicians in Washington, Maduro's nowhere near the threat to me as an American that American politicians are. And it would be useful, I hope, for your listeners to consider which governments are most detrimental to them. And I would suggest that a rational arithmetic discussion of that would mean that the politicians which are closest are maybe not the most venal, but they're certainly the most dangerous.
Yeah. I mean, for those of us in Europe, Russia is typically pegged as the boogeyman. So they're always like, oh, Putin's gonna attack Europe, but then the funny commentary I always hear is that, like, what's there in Europe for Putin to come for? Like, he has all the resources that Europe buys from him, so he has no need to. Plus, he'll be taking on the debt. So
I would be afraid of Putin, but I wouldn't be as afraid of Putin as I was of Merkel. Now, it's true that Mr. Putin possesses lethal force. But so did Mrs. Merkel. If you don't think that she possessed lethal force, try not paying tax in Germany if you're German. You will find out just exactly how benign she is, which is to say not very. And she has the ability, or she had the ability, to express her will on Germans, which Mr. Putin didn't. By the way, I'm not attempting to justify anything by way of Mr. Putin's actions. I'm just suggesting that politically, the most dangerous politician is the one closest to you. There's football's a popular topic in Great Britain and, of course, Ghana, where you're from. There's a wonderful phrase in football called own goal, which is to say where you accidentally put the ball into your own goal and give the other side a point. And the governments of Europe, and the United States for that matter, are scoring own goals repeatedly. The hollowing out of the British industrial and financial services base, the imposition of excess taxes on the best producers in Britain is a wonderful own goal. Germany's decision to rely on solar where the sun doesn't shine increasing grid stability and increasing the power prices by 500% on the average German. I mean, the United States should send Mrs. Merkel a medal. She is responsible for the relocation of the German petrochemical industry from Germany to the U.S. Gulf Coast. She did the U.S. Gulf Coast a tremendous service by causing all those very, very, very high quality German companies to have to relocate from Germany to Alabama, Louisiana, Mississippi, Texas. But that's an own goal.
Yeah.
It's an own goal.
And they're not going to stop, sadly. They're just going to
That's
keep
correct.
digging. They're just going to keep
Correct.
digging. Right. So we touched on silver shortly. Our last interview was on the 18th of July. I looked at the date and the price of silver on that day. It
Yep.
was $38. And back then, people were ecstatic. They're like, oh my gosh, silver's at 38. Well, just before this interview, I checked and it hit $80. So it has more than doubled since our last interview. Do you know what the factors were behind this
I
rally
can
to eighty
I can
dollars?
guess. Understand that a topic as big as that, your chances of being completely right are zero.
Mm-hmm.
But there are various factors that went into it. The first is that silver, in real terms, not nominal terms, was too cheap.
Yeah.
We talked in that interview, Kojo, you and I, about the fact that in prior precious metals bull markets in my lifetime, when gold established the momentum that validated the precious metals narrative, and generalist investors came into the precious metal space, that silver began to outperform gold. Guess what? For once, we were right.
Yep.
The last 3 months have seen dramatic outperformance of silver relative to gold, and gold has performed well.
Mm-hmm.
Let's look at some of the subfactors. The first subfactor, I think, has been the incredible rise of Chinese demand, both speculative demand, but much more importantly, industrial demand. People forget that silver is a key industrial material, and the Chinese have begun to be concerned about the sanctity of supply
Mm-hmm.
for their industrial machine. And they have decided to institute export freezes. Well, kind of export freezes. If you're a friend of the government, you still get to export a little bit, but if you aren't a friend of the government, you don't. Typical government activity.
Yep.
So let's leave my continued political message aside. We'll return to it later. And talk about other idiocy. Earlier in 2025, when American tariffs were all the rage, the global industry, but in particular U.S. fabricators, became concerned that if they imported silver in the United States, that they'd have to pay tariffs or taxes. And so there was a massive flow of silver from Europe to the United States to beat the tariffs. The idea being if tariffs didn't materialize, you could rebalance. What happened is that so much silver left Europe, and in particular the LBMA, that they developed structural shortages in Europe.
Yeah. For those of you know where LBMA is the London Bullion Metals
Market exchange.
Association, I believe. Market
Yeah.
exchange, yeah.
Yeah. One of the two primary, well, now three primary silver markets in the world. At the same time that all of that was happening, we had a circumstance where you began to unravel a 4-decade-long period of underperformance of silver. I'm not going to say manipulation because I don't think there was manipulation. I don't think anybody had to manipulate the price of silver down because it was falling all by itself as a consequence of the strength of the US dollar. But that ended in 2022. It took a while for that spring to coil and break, but it did. And when it broke, two things happened to the US silver market. The first was that because of the structural shortages in Europe, spot prices in Europe were 4 or 5% higher than they were in the US. So people who had bought futures contracts expecting to cash settle figured out that they could take delivery, ship that same silver to London, and make 4% overnight.
Yeah.
Pretty tempting.
Nice arbitrage.
I did it myself.
Okay.
And what that meant is that you began to unravel the US paper market. And the US paper market was horribly leveraged. Some days, the futures market for all delivery dates exceeded by 200 times, not percent, 200 times the amount of silver available for good delivery.
Yeah.
It was too leveraged. It made silver really easy to manipulate. Uh, you could borrow silver, either long or short, and either sell or buy the silver, depending on your point of view, and leverage that position in the futures market, and let your actions in the physical market overnight give you leverage in the futures market. So you had all kinds of short-term manipulation happening in the silver market. But when we developed a structural shortage, then things began to go wonky.
Yeah.
The wonkiness was reflected in the US and lease rates. Lease rates for a credit borrower in the silver space traditionally have been 4.5% or 5%, 4 to 5%. Briefly, they hit 40%. Because rather than leasing inventories to jewelers and fabricators, holders of silver began shipping the silver to London, making 4 or 5% overnight. So there was no silver available to lease. All of these things came together at once. And I will tell you, it's going to be very difficult for your listeners to get their head around this. But in the last 6 months, given the fact that the silver price doubled, arithmetically, silver is precisely half as attractive as it was in July. It's difficult for people to understand this. The move in the metal has justified the narrative, but the move in the metal has also taken away some of the incentive to participate in the narrative. Please, Kojo, reinforce to your viewers that the cure for high prices is always high prices. And a contrarian means that you buy stuff that's hated, not when the thesis has been validated, but rather when it's obvious. And I'm not suggesting the silver price is going to collapse. I'm just suggesting to you that the easy money was the hate trade, or at least the boredom trade. And now we're in the fascination trade. I believe, as you and I discussed in July, that we are in the midst of a very broad-based, very long-lasting gold bull market, perhaps 10 years long. But that doesn't mean that we won't have periodic declines. Students of history, you're too young to know this, but you could read history and learn it.
Oh, I read, Rick.
I know you do. I'm talking to your audience parenthetically through you.
No problem.
Making fun of you is easier than making fun of them. In the bull market of the 1970s, when the silver price went from $1.50 to 50, not a typo, $1.50 to 50. In the middle of that market, in 1975, the silver price fell by half, a 50% decline. Now, people who had been dyed-in-the-wool silver bugs at the beginning of 1975, at the end of 1975, wish they never learned how to spell it. And it's an important consideration, given the fact that silver recently has gone, as you point out, from $38 where people were happy to $80 where people are giddy.
Yeah.
It would take nothing to take the silver quote back down to 50. It wouldn't change the bull market at all. It wouldn't impact the supply and demand mechanics of the silver market for the next 10 years. But it would scare the bejesus out of recent adherence to the silver story. The speculative part of your audience needs to think about how they would respond psychologically and financially to a decline in the silver quote from 80 to 50. If that decline from 80 to 50 would cause them to buy more, they're going to do well in this market. If it would cause them to sell in panic the silver that they just bought at 75, they should deliver mail or do something sensible for a living.
Yeah. I was part of the crowd that was celebrating the April crash. I think it was Liberation Day. And I was we follow each other on X, and I was telling everyone, look, this is a gift. This is absolutely a gift. Like, you should be buying here, because the gold silver ratio went to 107.
Yep.
And honestly, I just thought, look, we are not going to get a better ratio here. Just keep buying. And now it's all the way down to 50, 55, I believe.
Yeah. And Kojo, when you're given gifts like that, as a trader, it's important to take some. I'm not saying liquidate your whole position, But if you bought silver because you thought it was due for an explosive move and you got an explosive move, you haven't
Take it.
made the money until you've taken the money. I'm not saying sell all of your position. I'm not even saying sell half of your position. I'm just suggesting to you that if you buy something when it's overbought, you might consider selling it. Pardon me, if you buy something when it's oversold, you
So
might
yeah.
consider selling some of it when it's overbought. These hockey stick charts that you're seeing today, we're doing a hockey thing rather than a football thing.
Yeah.
But people need to understand that the backside of a hockey stick is just as steep as the front side, but it's a lot less fun.
Certainly.
If you sell some silver at 80 and it goes to 100, you're going to kick yourself. But you're kicking yourself for taking a profit on $39 silver and moving it out at 80. I've made worse mistakes in my life, Kojo, than booking an 80% profit as opposed to 110% profit. If by contrast, the furor engendered by that convergence of events causes the silver price to decline, you will live to fight again another day.
I agree. I agree. I mean, for me, I don't typically trade it. What I do is when I see the massive decline, that's when I buy physical. So it's
Yep.
like, okay, I'm stacking the physical. I don't plan to sell until I see the ratio go down to what I believe is the fundamental, so around
Got it.
15.
Got it.
Um, and if I see it go up, instead of I still buy along the way on the dips, but then I just buy less. So my average just creeps up slowly.
Yep.
That's another way to play it instead of buying the high and regretting you can spell silver like you said.
Yep.
I was hoping you could share the story. I think you've talked about it maybe once or twice in your interviews. You talked about the difficulty of procuring silver for the Sprott
For
ETF.
Sprott, I haven't talked
Yeah,
to Sprott in the last week, but through most of the prior silver shortages, with the exception of 2013, Sprott has never had difficulty buying wholesale quantities of physical silver. In the United States, in the retail channels, retail denominations of physical silver on most dealer shelves are gone.
yeah.
The premiums that the dealers are charging retail buyers are, from a historical point of view, let's just say they're generous. Okay. Um, and the refiners, the people who produce new supplies, have been constrained because traditionally those people have leased silver, which is to say they've relied on vendor finance for their silver inventories, and that vendor finance has suddenly become very expensive. What used to be a 4% cost of capital became a 40% cost of capital. So the replenishment of retail channels, particularly in 1 ounce and 10 ounce product, has been really constrained.
Hmm.
At the same time, well, the U.S. was the overwhelming physical buyer of silver. Overwhelming physical buyer of silver. It's estimated now that 20% of retail physical demand takes place in Dubai. So there's a
Yeah,
second, there's a
I think
second
in
market
Dubai it's
competing.
in triple digits,
Yeah,
the silver price.
yeah, and so uh, that's been an interesting exacerbating factor. Uh, Sprott, and for those who don't know, Sprott is a leading uh, asset manager in the precious metal space. They manage about $60 billion in assets, including the Sprott Physical Silver Trust, which
Hmm.
is one of the largest, if not the largest, holders of physical silver on the planet, on behalf of 270,000 mostly U.S. investors through the New York Stock Exchange. During periods of time when the silver market appears attractive to speculators, and those speculators come in to buy the spot physical silver trust as opposed to buying physical silver itself, which they do because there's lower transaction and storage costs. The the Sprott Physical Silver Trust issues shares and uses the proceeds from the shares to buy more silver. And there are days, single days, when Sprott has to go buy $50 million worth of silver, which can be a challenge.
Yeah.
I remember myself when I was deeply involved in the management of Sprott in 2012 and 2013, that silver squeeze where Sprott literally cleaned out the Toronto market. We cleaned out the Ottawa market. We cleaned out the Montreal market quickly. We had to go to Chicago. We cleaned out the Chicago market. We had to go to New York. We weren't alone by then. We cleaned out the New York market, and we actually had to buy physical silver in London. We were always able to, through the good offices of those hated bullion banks, who always seemed to be able to buy silver for us. We loved them, by the way.
Okay.
If they were short, that was great because we were the buyer and we got delivery. What happened to them is a different question. I haven't called Sprott, but I'll try to do so today or tomorrow to find out from their desk how difficult it has been to buy wholesale quantities of silver in this market. I suspect, that they had to compete a little bit with the LBMA, given that the overnight prices in London until very recently were 4% higher than they were in New York.
Yeah. Yeah.
The
And I think
temptation, of course, if you're a New York dealer, would be rather than sell to Sprott, you sell to Barclays or Deutsche Bank or somebody there.
and in pound sterling, the dollar equivalent is also higher than 100. It's £80 for retail.
Wow.
So yeah, it's remarkable to be talking about silver at these values. But personally, I generally think silver is going much higher. I sometimes feel shy about talking about my target, but I think it's going $900 plus. I genuinely do. So that's why when I see the spikes and people get ecstatic, I'm like, look, if you get excited at these levels, you're gonna sell maybe a bit too early. Because like you said, it might be a 10-year bull.
If you're prepared to endure volatility, a lot of volatility,
Yeah.
breathtaking volatility, you're absolutely right. You and I talked in July, and we talked again in London about the fact that I believe that gold will maintain its purchasing power for the next 10 years, while the pound and the dollar will both cost you massive amounts of purchasing power. I would suspect that major fiat currencies around the world will lose 75% of their real purchasing power over 10 years. If gold were to maintain its purchasing power, that means that the gold price in nominal terms, in pound sterling terms or in dollar terms, could easily increase threefold or fourfold. Traditionally, going back to the 1970s at least, when the crossover occurs, which is to say when silver begins to outperform gold, silver performs 50 or 100% better than the gold price, which would suggest, I'm not saying this is going to happen, by the way, Kojo,
Yeah.
but if that happened, you could see the nominal price of silver I don't want to see this in the headline, could increase by 500 or 600% over 10 years.
Wow.
I don't know if it will,
Wow.
but what I do know is in the next 10 years, at least twice, both the silver and the gold price will decline by more than 30% in a year. That will happen. It's absolutely a guarantee. This volatility and subcyclicality is a feature of these markets. And so your audience and you yourself, Kojo, need to prepare psychologically and financially. Don't go all in the trade. Don't go leveraged in the trade.
Definitely don't leverage.
Expect that the market's going to whack you in the head with a hockey stick at some point in time, and be prepared to weather that.
Yeah. I suspect it will coincide with, everyone's calling for a crash in the stock market because of the AI bubble. I do get the feeling it would happen along with that, just because they can't let precious metals be seen to be doing well while markets crashing.
Well, certainly the cause of the 1975 crash in precious metals was the decision by the U.S. Congress to act rationally for a little while. They raised interest rates. And raising interest rates meant that the market wrongly believed that the U.S. society had an interest in maintaining the sanctity of the U.S. dollar. That was naive.
Yeah.
And that increase in the interest rate tanked the equities market. It really tanked the bond market. And it affected both consumer durables like auto sales and the housing market. Congress lost its nerve. The Fed panicked and lowered interest rates, and then it was off to the races.
Yeah.
When investors around the world came to understand that the US society had no interest in maintaining the sanctity of the US dollar, then the game was on in precious metals. Precious metals prices declined by half, and then they increased from that bottom eightfold in 5 years. Past is, in this circumstance, prologue, I suspect, Kojo.
Hmm. Hmm. So we've talked about, the currency going down in value. We are students of history, and we know that this typically is accompanied by, populism and on occasion socialism, communism. And we are seeing that the UK has decided to turn, communist with the Labour Party.
Yep.
In New York, the city of capitalism, they have I see you shaking your head. They have decided to elect, Mamdani, who is a self-proclaimed capitalist. And there's another state you've been tweeting about. There's a mayor who was recently she was recently elected there. I can't remember. Is it Katie or something? I can't remember the name. But she's also a socialist. So I'm just wondering, how much worse does it get till it gets better, till we libertarians get our day in the sun?
Well, Kojo, I would suggest that you have to look after yourself. Society's interest, to the extent that you get ahead,
Hmm.
steal your assets. So, I mean, I don't know if there's relief in the broad sense. There may be relief for people like you. You might decide, coming from a hot country, that Dubai is more to your liking than Manchester, um, or Singapore, or something like that.
Yeah,
It
yeah.
may be that one of the African states, maybe the people decide that they're tired of poverty, and that they would like to experience an increase in living standards. Stranger things have happened. But I don't see, I mean, what I see probably is a circumstance like 1980 in the United States, when disgust with government reached such proportions that we elected Reagan. He didn't
Mm.
reduce the size of government, he just slowed the growth of government. That was
Yeah,
all he had
he
to do.
tried to. He
Yeah,
tried to,
well,
but
who
still
knows? Who
couldn't.
knows if he actually tried to? That's a different question we could talk about. Merely by reducing the growth of government, reducing regulation, allowing private wealth to outpace for a while collectivist idiocy, we kicked off a tremendous boom in the United States. We didn't fix anything; we just postponed the reckoning till today.
Yeah.
And I would imagine that there will come a time in New York City where the policies of the current administration, I think it'll happen in London too, wreak such hardship on the citizenry that they revolt. In my state, Washington State, the state constitution prohibits the government from charging an income tax without a referendum of the people. And the people have turned down that referendum 4 times in a row. So what
As
the
they
state
chuck
has
up.
decided to do is charge an excise tax in income by way of a payroll tax, which is to say, have an income tax that isn't covered by the law. And they have promised the voters that this will be a millionaire tax, or pardon me, a super wealthy tax.
Hmm.
They define super wealthy as $125,000 a year in annual income, which is not enough money to buy a house in King County. So you can be, as a consequence of your income, stuck on rental rolls for the rest of your life and still be considered for tax purposes to be super wealthy. You can bet that once this tax is implemented, that they will cast that net broader and broader and broader.
And of
That
course,
will
with
happen.
fiscal drag, I
Uh,
mean, inflation bringing people into that
correct.
higher tax bracket more and more.
Correct.
It's so nefarious. It really is.
I'm actually delighted that this is happening in New York City, because New York City is a media capital, and we'll have the ability to see the effects of socialism in real time, not in
Hmm.
Caracas or Havana, but rather in New York City. The mayor's, I don't know what you'd call her, the housing major domo has said
What's that?
uh, she runs something called the Tenants Council.
All right. Okay.
No, notice that there's no municipal landlord council, but we'll leave that alone for the time being. She said publicly yesterday that we need to establish a new relationship with property, that it's about control. It's not an
Um.
asset that you use, it's an asset that you share. And
Um.
that control is a form of white supremacy. And that white families in particular will bear the brunt of her new activities. Uh, New York has a fairly substantial Caucasian population, and she has, in effect, declared war on them,
Yeah.
which I think is highly amusing. I also think the fact that she has said overtly that your house isn't yours, that it's hers, will cause some distress among middle class homeowners of any ethnicity in the state. Pardon me, in the city. And I think this is continuing. Uh, I know that if I ran the real estate guild in Florida, I would award Mondani or Mondami or whatever, however you say his name, and
Yeah.
her Realtor of the Year for Florida, because all kinds of people who are able to create wealth in New York City are gonna move, to Florida. Money goes where it's treated well. They're gonna hollow out the wealth creating base of New York City.
Yeah.
As Margaret Thatcher famously said, eventually, sooner than you think, you run out of other people's money.
Yeah. And I mean that's the concept of the own goal you were talking about as well.
Yep.
So I mean, to us, I don't know whether it's not explained well enough, but to people like us, like it just seems so simple. You cannot tax your way to wealth.
People are bad at math, I think, Kojo. I think really good at feeling and not so good at thinking. If my memory serves me correct, you're originally Ghanaian.
Yep, yep.
Um, I've been active as an investor in Ghana for 40 years.
Hmm.
Given the amount of income that was paid by the gold mining industry to the government of Ghana, and the amount of money that the Ghanaian cocoa marketing board made on the backs of Ghanaian farmers, and now the money that the Ghanaian government is making from a 500 million barrel offshore oil discovery, the idea that there are budget deficits in Ghana is mind-boggling to me. I don't want to criticize Ghanaian policy. I'm not Ghanaian. I'm not part of the government.
Feel free.
But
Feel
I have
free.
been part of paying a tremendous amount of tax in Ghana over 40 years. And my real response is just, where's the money? Show me the
And
money.
it's going into people's pockets. It's going into
Uh,
their pockets.
at best. I mean, I think some of it is going to the pockets. I think a lot of it is just flat wasted. I don't know that to be true. I know that the gold mining industry was asked to build schools. Okay, we do it. They're asked to pave roads. Okay, we do it.
Hmm.
We're asked to do rural electrifications. Okay, we do it. We have a royalty, we have an income tax, all that kind of stuff. And then the Ghanaian government doesn't staff the schools. They don't maintain the roads. And by the way, Ghana is better than most of West Africa. Ghana is, for our industry, despite its sins, the promised land. At least in Ghana, as far as I know, we haven't had to pay bribes to the government. They haven't
Yet.
been as corrupt, in my
Yeah.
experience, as they
Yeah.
have been inefficient. And I'm not doing this to criticize Ghana. I'm just suggesting that the experience that you grew up in is similar to the experience that young people growing up in London or New York City are about to experience. And it ain't going
Yeah.
to be fun. When young people talk about socialism, they accuse me of being heartless, which is probably true. Um, I just say, in my lifetime, in my experience, I'm not a politician, but I notice as an example in Korea that people flee from the north to the south. I noticed that the exodus of leaky boats was from Havana to Key West, not from Florida to Cuba. I note that the Berlin Wall was not meant to contain West Berliners. It would be interesting for somebody to show me a place where socialism has worked. Some people would say Sweden, except for Sweden isn't socialist in a conventional sense. Sweden has a much more investment-centric tax code than the United States does. By that measure, they're less socialist. They have a much less progressive tax code than the United States. Hasn't worked anywhere ever. The good news is that we get to see the experiment real time, live in New York City, which will be well reported on by the same media hacks that supported it for 20 years. A pox on their house. They're about to get their just desserts.
But you know what they're gonna say? They're gonna say, Mamdani was held back by Trump because Trump didn't fund New York's initiative and stuff.
I mean, people tell me that Cuba failed not because of socialism, but because of sanctions. There was only one country in the world that observed those sanctions.
Who?
You know, I lived in Canada at the time and visited Mexico, and both Canada and Mexico traded with Cuba like crazy. It's just that the Cubans couldn't afford to buy anything. Cuba was kept afloat by Russian subsidies and then Venezuelan subsidies. The idea that Cuba didn't work or North Korea didn't work because of sanctions is idiotic. It didn't work because they didn't have the capital to sustain their economy, and they didn't have any currency whatsoever that they could use to buy goods from other places. It failed because it failed.
That could be why there's like the Western media is so shocked that Russia is doing well, because they thought all the sanctions by Western countries on them would, cripple them. But actually, their currency has done better than the dollar.
And nobody pays attention to these sanctions. No. What happens is that Russian oil suddenly becomes Indian oil. Never mind the fact that India doesn't produce much oil. Somehow, presto changeo.
And they pay more. The Europeans pay more for it.
That's right.
It's really dumb.
It's really dumb. The oil to buy and then buy it back as a refined product and pay an upcharge.
So Rick, when we met in London, you were asking me, how come I don't do the podcast anymore? And I said, well, it got me a bit depressed. And there was a question you asked me. I'm not sure if you realized it, but you asked me, was I doing it for fun? And yeah, I mean, you're absolutely right. It's all about educating people to make them aware of these things, because they wouldn't find it anywhere else apart from, independent media. So in this final stage, for the next 10 minutes or so, I want to go through different age groups so that you could offer a piece of advice for them, with regards to the financial health, maybe investing as well.
Right.
So the first group is 20 to 30-year-olds. These are typically people who have just left university. They're now entering the workforce. I mean, obviously now it's a bit different because with AI and everything, their uni grads aren't really getting the job roles as they'd expect. So that's also an issue. And at the other end, the 30-year-olds, newlyweds starting a new family, they might stake on a mortgage. And also there's this Trump, 50-year mortgage. Let me know if you'd advise people to take that on. I think I already know the answer to that. But just for this age group, what sort of financial advice do you have for them?
Well, thanks for the question. For younger people, the 20 to 30 cohort, 3 pieces of advice. First of all, you have to acquire wealth. If you're working for yourself as opposed to having your capital work for yourself, you're going to have a very difficult time in the next 10 years. Lower your living standards. People hate that. They want to live rich, not be rich.
Yeah.
The luckiest thing that happened to me is I read a book when I was 16 years of age called Pay Yourself First. And that inculcated in me the sense that I had to save 10% of all income pre-tax. No ifs, ands, or buts. Didn't mean that I couldn't do something nice for myself. Didn't mean that I couldn't pay myself, buy myself a nice pair of shoes or take a girl out or something like that. It meant that I had to take 10% of income pre-tax and put it away before I did anything else. And if I had to buy something, if I had to raid that stash of cash, I had to sign a note to myself and I had to pay it back. In other words, after that, rather than saving 10%, I had to save 16%. And to keep the math simple, I charged myself 1% interest a month. Um, the consequence of that is that I began fairly early to have some money to invest, and I invested. And compounding only works if you're invested.
Mm-hmm.
The second thing is that wealth accrues because you generate more utility than you consume. Very simple. So invest in your skills. Understand that you get paid your salary, if you get paid a salary, because you generate more utility for the customer of your company than you get paid. You have to generate a profit for your employer, and you have to generate a profit for the customer. The customer has to have enough use for your goods and services that they are willing to trade the benefits of their own labor, which is to say, their money, for your service. Not understanding where money comes from. Money comes from the surplus of utility generated relative to utility consumed. That's where it comes from. Nothing else matters. Every other definition is bullshit. It's important that you understand that. Money doesn't come from the government. It doesn't come from God. It comes from you generating more utility than you consume, period, full stop.
Yeah.
And then learn how to invest. Invest in yourself and your education first. Read The Intelligent Investor by Ben Graham. Don't just buy it. I've probably sold 10,000 copies to folks, and probably half of them have gone unread. Buy it and read it.
I recommend it as well. Really good
And
book.
if you are interested in the topic, then read Securities Analysis, also by Ben Graham. If you read Securities Analysis and you employ the lessons taught, you will become rich over your lifetime. A guarantee. Do that. Read a book called Economics in One Lesson by Hazlitt. This will teach you the way the economy is, not the way the big thinkers, the Mondamis and the Merkels and the Kahns wish it was. It's a short book. In fact, people should read this before they go to university because it will inure them to the idiocy that they're taught in university, which is that money grows on trees and is somehow redistributed, by politicians or something. Read Economics in One Lesson before young people get polluted with the idiocy that they're learning in college. If young people do those three things, if they save rigorously, don't put it off till next week, rigorously save,
Yeah.
and if they have to buy a car or something like that, if they borrow from themselves as opposed from a bank, and they pay themselves back on a schedule so that their capital increases, they get to become capitalists. If you don't have any capital, you can't ever be a capitalist, right? Understand that money comes from generating more utility than you consume, and then learn how to invest the proceeds intelligently. The greatest wonder of the financial world is compounding. Compounding requires an initial investment, and it requires time. I look, and by the way, I'm no danger to Elon Musk or Bill Gates or George Soros, those people, but I look at the amount of money I'm worth today, and I am reminded of Warren Buffett saying that yes, he made some money thinking, but he made most of his money by sitting. Compounding, getting old, and not making egregious mistakes. That's hard to fathom when you're 20 years of age, but it's true.
Yeah. And time passes really, really fast. I mean, I've blinked. I'm already in the second half of my 20s, so it really does fly fast. So what about mortgage?
Most people never get it,
Second,
Kojo. Never mind the second half of their 20s. They get it. They don't get it in the
yeah.
second half of their life.
So what about a mortgage? Would you advise people of this age group to get a mortgage?
Yes, I would. Uh,
Okay.
I have used leverage a lot in my life. Mostly, I have used leverage to buy assets that generated more income than they cost. The idea that society is willing to lend me money for 30 years at a fixed rate that I can use to purchase an asset where my rents increase uh, is a gift from God. The idea that my
Okay.
cost of capital is fixed, but my returns in capital employed increase with inflation uh, is responsible for a lot of what some people regard as my genius.
Are there no risks in the real estate
There
industry
are there are
ahead?
there are absolutely risks, and there are times when you shouldn't buy. I had the really good fortune as a young man. Uh, I was an immigrant to Canada. I had no money, and like a lot of immigrants, like yourself, I suspect,
Yeah.
that terror turned out to be a very good thing. So the first house I bought was a triplex in a not so good area in Vancouver, and I was able to live in a bachelor suite in the basement while I rented out the two upstairs suites, the nice suites. And I was able, by fixing up the house a little bit, painting it and stuff like that, to increase the rents to the extent that the rents paid my mortgage. And I lived rent free. And I was able to save my rent. I didn't spend my rent, I saved it.
There you go.
And, and I was able 2.5 years later to buy another one. 5 years after I bought the first one, I was able to refinance that house and take out more than all of the money I had invested in the down payment. So I
Oh,
still had
okay.
the house, the rent serviced the mortgage. I had my money back, and I had lived rent free for 5 years. The wisdom of that was not apparent to me in the first year or the second year of that transaction. I was being defensive, not offensive. But after that first cash out, after 5 years, when I refinanced and took all my money out, a light bulb went off in my head.
I think that's the next stage of investing that I need to learn. I'm so
Rinse,
focused on
wash, repeat.
yeah, yeah, that's definitely the next stage for me.
There will come a time, Kojo. There have been 2 or 3 periods in my life where real estate prices fell precipitously. And people who had liquidity and they had the courage, they didn't try to time the bottom because nobody's that smart. You need to realize when things are cheap enough. And I didn't take advantage really of the real estate crash in 2008, 2009. But some friends of mine, Steve Sugarroot in particular, among them, looked at the fact that rent stayed solid. In fact, they increased a little bit as foreclosed homeowners had to rent. But the price of houses declined by half, and the
Mm.
mortgage interest rate stayed low. And Steve, I remember Steve telling me in 2009, this is a gift from God. This is truly a gift from God. And while all of the flighty speculators who had bought real estate at the top were panicking and selling, hitting any bid, Steve was slowly sucking up everything he could get as long as he could put in place a 30-year fixed mortgage, knowing
Okay.
that he could raise rents to keep pace with inflation while his cost of capital stayed the same. That simple piece of knowledge enabled him to hit, in the ensuing 20 years, a long ball home run.
Hmm. Okay. Definitely one I'll look into. We might have to speed it up for the other groups because there's not
Yeah,
much time left.
I have to be somewhere in 2 minutes. So,
In 2 minutes. Okay, real quick. 30 to 40-year-olds. So they've already started a family, have to prepare for college, paying for college for
uh,
their kids.
you should
What do
now
they
be
do?
deciding whether what you're doing for a living is what ultimately you want to do. You are now in a position where you spent 10 years gaining skills and you need to get paid for them. So if you're in a job that you don't like, it's time to change your job. It
Hmm.
is time to maximize the utility that you generate from others because now you have some utility that you can share. When you first get out of college, you have to learn how to generate utility. By the time you've been working for 10 years, you better know. Uh, so that's the first thing you do. You try to find yourself a vocation or an avocation that you like so much that you would do it for free because you're competing with people who don't like what they're doing and you're going to do a better job than they are. That's just the way it works.
Yeah.
And begin to be not aggressive with your employer if you have an employer, but explain to your employer that you want to get paid to succeed, not to try. Try to get yourself involved in performance based compensation where your compensation is variable. Don't decrease savings. Your rate of consumption, if you have kids, is going to increase, not decrease. So that means the savings is going to be a little harder. Try, if you can, with regards to accommodation, if the cost of ownership is roughly the same as the cost of rent, to own with a 30-year fixed mortgage, because the cost of housing will increase with inflation while your cost of capital will remain fixed for 30 years. The delta
Yeah.
between those two is the greatest gift you're ever going to receive. And continue to invest. And when I say invest, I mean invest, not speculate. Your portfolio in your 20s and 30s should be at least 75% investment, 25% speculation, unless you hit a couple of long ball home runs. If you have some money that you won't need in case of emergencies, which is to say, if you're rich, you can afford to speculate. If you're not, you can't. But continue to invest, and continue to invest in circumstances where time is on your side.
Okay.
That's really important.
And then finally, I'll make it 40 plus because they're going to be retirees and they're pensioners. What should
Yeah,
they
well,
do?
pensioners, first of all, we need to talk to them
Yeah.
because the future is going to be less benign than the past has been. For 40 years, we had increasing real standards of living and declining real interest rates. That ended in 2022. So if you think that your savings plus your pension are going to be sufficient to sustain you for the next 10 years, you got to think again. If I'm right and the purchasing power of fiat denominated instruments decreases by 75% over 10 years, that means on a fixed income, it's going to take you 4,000 pounds sterling to buy what 1,000 pounds sterling buys you today. Are you going to have it?
Yeah.
You need to ask yourself that. If you are
And
thinking that you're going to retire at age 52 and you run the math and the math ain't going to work, then your retirement age became 60 or 65 because you aren't going to go to a Commonwealth and get a fill up because the Commonwealth is going to be empty.
yeah.
There ain't going to be any Commonwealth. It's going to be your wealth.
And this is where the investment advice comes in. I mean, I don't know if 52 is too late to compound. It might be, but there are definitely
Kojo,
assets you can
I'm
play in.
compounding now. By now, with regards to my wife and myself, savings has become a habit. It's
Nice. There you go.
really weird that we consider whether we should buy a $9 bottle of wine or a $13 bottle of wine when both prices are irrelevant to us. But the
Yeah.
truth is that we both began savings in our teens, and we can't spend. We literally are viscerally incapable of spending money. You saw where I stayed in London. It was not the
Yeah.
Savoy. Uh,
I mean, I respect it because same here. I have to force myself to spend. I just rather invest than spend
yep,
really. But
yep.
yeah,
Kojo, I need to jump
but
off. I'm supposed to be somewhere 2 minutes ago.
there
Thank
it
you for
is. Yes,
this.
fine.
I look forward to a rematch.
You too, Rick. Thank you very much.
Bye bye.
Bye. And there we have it, Kaneki's third interview with Rick Poole. He was very generous to, go over the hour. I very much appreciate it. If you did enjoy this interview, please hit the like button, subscribe as well. Let me know what you thought of the conversation. I genuinely enjoyed this one. He's such a good time. Share this one as well with people you believe will need to hear about it. Personally, I think everyone needs to hear about it. You really do need to protect yourself from what's coming down the line in terms of currency printing and the populism as well. That's right on the doorstep in a lot of Western countries. So do be sure to share this on social media too. And I'll see you guys in the next one. Peace.